now. You ready?
Yep.
We're going to go cloud or computer.
And then if you look down in the corner, you should see something say more. See if you click that, it should be streaming too. You should click on Facebook. Yeah.
Oh shoot. Oh yeah. No.
All right, good evening, everybody. While Big Mike is getting that set up, we good to go for the most part because we're actually recording, so I can always upload this to the group and everything. But I want to welcome you guys to the second edition. If you didn't see last week's edition of the Forex and Chill, we actually broke the ice on what we're trying to do as a team. You know, with Cash Flow Syndicate, you know, powered by the Trader platform, is that we want to give back to individuals that are brand new to this, even though they may want to just be building a team. But we feel though it's even more vital and more important, especially in the times that we're in right now, in the past 120 days, the past 4 or 5 months. You know, we've been in this pandemic, and a lot of people have not been recession proof, meaning that, you know, they were dependent on their jobs because we didn't know that, you know, coronavirus, COVID-19 was going to happen. And a lot of people were looking for ways to make money from home and things of that nature. And, you know, I've been doing this a long time. Big Mike's been doing this a long time. Andre has been doing this a long time, along with some other leaders that's on the team has been doing this a long time. And we know that, you know, learning the skill set of trading is not easy, but it can be, you know, a kind of a difficult task. But what we're trying to do is, you know, shorten that learning curve for you guys and give some free information that you can invite your friends so they don't feel so bombarded when they ask questions, or if they want to become part of the team. We're just going to give them the basics and the idea of what, you know, being recession proof means in this time and day right now, because we're about to have a second wave. A lot of people are going to be laid off again. If not, people go back to their job. So, you know, we have a skill set and a platform there's where, you know, you can be recession proof. You won't have to worry about a job. You can do this from your home or on your phone. So without further ado, we got Big Mike. He is a proprietary Forex trader, been trading a long time, a lot longer than me. He's a part of the Cash Flow Syndicate. He's definitely a great friend. He's definitely a great teacher, a great mentor. And, you know, I just want you guys to give your undivided attention to him and really take notes and learn, because not only building the team as far as the trader side, but the education part is just important. So I asked if you have questions, put them in the chat. We have Brother Dre that's going to be moderating. Don't feel shy to not to be able to ask any question. You know, no question is a dumb question, because we know that we have people from all different skill levels in this business. So we just want to give back to you guys, and we hope that you guys can learn something from this. So without further ado, we got Big Mike Wilkins in the building, and take it over, big homie.
Hey, how you guys doing tonight? I'm just getting that set up so we can go ahead live on Facebook and stream this, so we can get this word out to everyone, so they can go ahead and learn how to beat the bank and make some money from their cell phones. So just give me another second. I just got done sharing it, and I think we're good now. Okay, perfect. Okay, guys, so tonight, Mike Wilkins, Philly Forex, your Forex coach. I'm here tonight to talk to you guys about how we get money on these markets. And tonight, we're doing these free classes as a series to kind of give you guys an idea or opportunity to know how you can, one, beat the banks, become your own personal bank, and then start doing business with banks as a business. And so, guys, we come here tonight as Cash Flow Syndicate, partner with VOP Global, to come to you guys to teach you these skill sets and how you can be like Wall Street. We can bring Wall Street to Main Street. So tonight we're going to discuss, one, market structure, and we're going to teach you how that looks in the marketplace. And then two, we're going to talk about money and risk management. That's probably the most important thing when you do become a trader. So I think we will start with money management and risk management first. Let me go to share my screen and show you guys a chart that we like to use with our team when they're growing and compounding their money. And Albert Einstein said a quote. He said, "The compound interest is the number one. It's pretty much the eighth wonder of the world." So what happens, guys, is when you start to trade and compound, you're able to easily grow your money at a rate that, like the banks will normally do. So, guys, this is a compounding sheet. Hey, can you guys see this? Can you see that, Ramon? The compounding sheet. me see, he must have walked away. I'm pretty sure you guys can see it. So guys, let's imagine you just took $100 balance. Because see, the cool thing about Forex right now, the way we trade, you pretty much download an MT4 account. It's a free app. Once you download the free app, you literally can sit there. You can put your money into the market. You just trade on your own. Let me check their chat. Let me see. Look, someone's asking a question. Maybe they're trying to see if they can see me or not. Let me see. Okay, they can see everything. Great. Okay, it looks great. Okay, cool. Okay, guys. So again, this here is going to show you how you can pretty much decide how you want to grow your money. So we have pretty much a pretty high percentage on here, is 8%. Let's say someone started with $100 balance, guys. When we say risk to reward or money and risk management, so you're never supposed to put money in Forex more than you're able to lose or risk. So $100, most people can risk and lose. So let's say we started with just $100 in the Forex market, right? You take this $100, you throw it into the marketplace, and let's just put this on, I don't know, let's say about 2% account growth. Now this could be daily, weekly, monthly, yearly. The banks are going to give you 1% of your money a year, so you actually beat the bank by getting 2% a year. So I don't know if you guys knew that or not, but that's why we said beat the bank when we first started talking. So guys, let's take a look at this. You see we have trading days here. It goes from 1 all the way down to 60. So the cool part about this is, guys, you have 60 days we're going to calculate. So that's pretty much 2 months. And in Forex, you only get 20 days to trade because Forex is 24 hours a day, 5 days a week. So pretty much, guys, you get Sunday night until Friday afternoon. So let's just pretty much say this is two and a half months. Let's say maybe 2 months and 2 weeks, okay? Something like that. So let's just say, for all intents and purposes, guys, and it always put up a disclaimer, guys, that everything we talk about on here, past profits never could predict future profits, guys. Always a disclaimer, guys. Never could guarantee you anything. We're not financial advisors, but we do understand how to trade and educate in the Forex marketplace. So again, starting off with day one, you have $100. If you can get, let me hit enter first so it can populate. Starting off with day one, if you can take your first trade and you can catch 2% of your account, guys, you made $2. Now, I know you probably like, oh, $2, but guess what? You didn't leave your house. You didn't have to go to work. You didn't have to hop on a train, a bus, a plane, a boat to go anywhere to do that. You do that from your cell phone, your computer, or tablet, right? And so, guys, the cool part is now we start talking about how much you risk and how much you're willing to lose. So something here called a stop loss. The stop loss shows you how to protect your money or how to mitigate your risk. So if you're taking a trade, if you're an aggressive trader, you might go for what they say 15 to 20 pips. If you're moderate, you might go to 20, 25. If you're conservative, you might go 25 to 30. That's how much money you're willing to lose to take a gain and profit inside the Forex marketplace. So me personally, when I'm trading, I risk about 2% to make up about 4 to 5% when I trade. That's my money and risk management to keep me safe. Okay, so guys, you see an aggressive trader, he's going for about 10 pips. More moderate is going for about 15 pips, take profit, 20 pips. We'll talk about that stuff a little when you guys get inside education. It's more of a broad range tonight. Just want to give you a little background on it. Okay, guys. So as you go down, let's say we got. So I have these other lines here to give you like mile markers. So say we hit day 5 trading, guys. Our $100 turned into $110, and we caught almost 10% on our account in less than 5 days. This can happen in one night. I've had nights where I knocked out probably 15 to 20s because I scalp, I'm in and out trades, and you can just catch these all night. This depends on how you want to break it down. So, guys, you see after about 2 weeks now, or 10 trades, it could pick, like I said, days or weeks. You see, guys, you almost have 20% on your account, and it's compound. You started with $100, and then you have $120. I'm talking about low risk and getting some pretty good rewards, some good returns. Now, guys, if we go down to the bottom, and we're going to play a game here. We go over to the bottom, we get to 60 trades. So you completed 60 trades, either it was 60 days, once a day, or you took 20 trades a day and did it at a faster pace. But all intents and purposes, you took that $100 and turned it into $321, and you compound, okay? Let's take that $321, put it back in the balance. And we'll go through about a year's trading with good money and risk management. So let's say you hit that $321, and you put that up here. Okay, guys, so now you start with this new balance, and you're sticking with the same goals. You never change your goals. You never change your risk. You always just change your lot size. You always change the amount of money you want to increase to increase your account, your trading account. And I know this might seem like Chinese and Spanish, but this is teaching you guys how professionals trade their money. They don't really worry about too much of just like a massive amount of trades, but they most times compound so they don't have to work as hard. Okay, so guys, you get your first 5 days. So you took that $100 and you almost turned it into $350 your next 5 days. The next 10, you took it almost to $400. You get the 15 days, you almost at $432. Next 20, you're almost at $500. 25 days in, you were at 526. And I scroll to the bottom, guys. For about 4 months of trading, you took $100 to 1,000. Now that's almost 1,000%, guys, of returns on your money. You know how crazy that is? When you talk about putting $100 inside of a bank account, you guys take your money, you put it in the bank. The bank takes your capital, your cash. They give you a checking account. They unwillingly tell you to get a savings account. So when they give you a savings account, you can literally take and you sign for that. And when you put your money in the savings account, the bank immediately takes that cash and capital and they turn it into digital currency, just like I do when I trade Forex. They put it on the marketplace, bonds, stocks, futures, Forex, what we trade now, cryptocurrency. They put that money out there into the marketplace and they let that money make money for them. Forex is a 5.3, actually about 6.5 trillion marketplace, including with crypto and Forex at the same time, as money moves around daily. And the banks take the money that we put in there every day, charge us interest rates or fees for even like taking money out the Mac machine or all that. So you put your money in there thinking you're getting 1%, but they're taking it up when you get an overdraft fee, if you get a fee for going to the Mac machine, if you get a fee from going, you guys know the fees, you probably know more than me probably. But bottom line, after this 60 days, you got $1,000, right? You put the 1,000 up here, and guys, we're gonna stop at the beginning because we did about almost a year now. Let's see, $1,000. So we're at about 8 months after that. You see, you'll turn your $1,000 after about say 30 days, guys, 1,800, and it keeps getting better. $3,000. And we'll do one more because this will give us a complete year. So 32.16. Guys, we staying risk 2%. We never risk no more. We never went for no more than that. Always 2%. So let's put 3,216. This will give us a whole full complete year of trading. Okay, 32.16. Start off $3,000. After about a week, you at about $4,000. About a month, you at 5,000, almost 6. Guys, after a full complete year, you could have put almost $10,000 in your trading account if you consistently took trades and went for 2% off of $100. This can be done, guys. If you were only 50% good on this, you would make $5,000 off of 100. You know, I would take that opportunity any day of the week. Okay, so guys, this kind of is going to close out on the money and risk management section. I'm gonna go on a chart and give you guys an example of how you manage your money as well. So I'm gonna stop sharing this screen. We're going to go back and share and go on to the internet real quick and hit that up. Go here. All right. So guys, we're looking now at a Forex chart on a platform called TradingView, and we're looking at the Great Britain pound versus the JPY, the Japanese yen. As you can see it up there. And guys, this is a pair that me and Ramon was looking at, and it's kind of, I think, one of his favorite pairs, and we're talking about it. And we talked about it last week, so I thought I would go ahead and kind of cop on here and show you guys a few things. So guys, if you look on this chart here, I had a couple markers put on here where the market is showing the market looking to come down and looking to go up. Because the market does three things. It goes up, it goes down, and then it goes sideways, right? So we're going to put this on the hour chart to kind of give a little more structure. Let's go hour chart right here. And guys, what I mean by risk to reward is just say today was a trading day and the market came here and we had something called a double bottom. So that was 2 touches at the bottom. And say Ramon's getting up. He's like, man, I want to trade GJ today. He look and say, okay, the market would have made structure at the bottom, triple bottom, right? The chart pattern. And the structure was put here. Let's go here and pull this up. And you see that the market is in a range of market, right? In environment. After it came from what they call a downtrend. Meaning the market was down, was trending down, right? And then it broke the structure of that downtrend here, and it retested the trend line here, right? And reminds you, oh man, I think I want to buy the market because one, the market, it came here once, twice, 3 times, which created a nice zone right there, or what they call an order block, right? So what happens is that supply zone made an area where it's like, okay, we're looking to buy the market because you buy from supply and then you sell from, you buy from demand and you sell from supply. So if you have a whole lot of demand at the bottom, that means now it's time to buy because people want to buy from you. When see like when I'm a gamer, so when PS5 comes out, there's gonna be a lot of demand. People are like iPhones. When the iPhones come out brand new, there's a whole lot of stock. It's down here, right? It's kind of cheap, so people buy it. When it comes up here and it gets a little less scarce, and say somebody else has it and they want to sell it because then they went to the wholesaler and they bought it from them and they came back up here and said, look, I want to now become a seller of the iPhone. They have a lot of supply, so now they're able to sell it from a high point and make money until it comes back into the demand zone where they go in and get more supply and then they buy more. And so that's supply and demand, guys. So we're talking about money and risk management. So as we come up here and we realize after the market plays out, we gotta move with the bottom, move with the top, move with the bottom, move with the top. So we had a downtrend coming down, really from all the way over here, for real. So we had an outer trend line and we had an inner trend line. The market was in a downtrend, and then it tried to break the structure, which it did here on a short-term basis, and it retested. So what happened when Ramon was trading, when he thought to himself, he said, you know what? I think I'm gonna get in the buy. And so he went ahead, he found out he had what you call a long and short position tool. He picked the long position because he wanted to be a buyer. Short means you want to sell, you go short. Long means you want to go long, you want to be a buyer. So he takes this long tool. He might enter somewhere between here and say, okay, let's place that. Now, guys, if he makes this entry, say he want to risk only about 2% or 1%. If you guys look at the bottom, this will show you the percentage that you're willing to risk to go for. So, guys, when someone's trading, at least when they get a 1-to-1. So when we look at our compounding chart, if you say, hey, I'm willing to risk 1 to 2% per trade, you will literally put this here. And guys, you see you're only risking a 0.17%, which is great because you're definitely not even risking what you don't even risk. But look at your reward. So let's go up top. And we said, okay, we want to at least come back to this previous zone because that's where money is going to possibly go back to. Forex has muscle memory. The bankers that trade this money and the governments, the banks, institutions, they actually put money up and it comes down cyclical. So the money normally goes back to where it came from. So you could put a stop loss up here and say, okay, maybe it might come up to this level. Let's just say this level here, right? And guys, you're almost going for almost a 1% win and risking 0.18%. This is a beautiful situation here, which they call in the professional world a R, a 2R, 3R, 4R, meaning you got risk reward ratio. So if you risk 10 pips, you get 20, that's a 2-to-1. If you get 30, that's a 3-to-1. If you get 40, it's 4-to-1, 50, 5-to-1. So we're looking at somewhere around, 24 pips to 100 pips. We're looking at about almost a 6 or 7-to-1 trade. You get these opportunities and then you move your money up and you make it like this, guys, you have no way but to be successful. See, in Forex, guys, you're going to always have what they call probabilities and statistics. You're going to take an entry. You can't guess because the market, it'll mop you up if you try to tell them what to do. All you can do is watch the market, see how it's behaving, what currency is strong, what currency is weak, and decide, hey, I like GBP today because they're stronger than the Japanese yen. And you buy it because you see that correlation between that pair or those two countries or those two GDPs, gross domestic products, are literally compared to each other. You say, hey, I'm going to take that buy. And when you take that buy, you get the cash out, take some money off the table. So that's the basis of Forex and money and risk management. Now, I'm going to go ahead and erase this. And guys, it's 8:25. We got about 5 minutes. So then I don't want to hold you guys up. I want you guys to be able to get some questions answered. We will come back every week. Okay, and we're going to do this. I believe we'll be back on Thursday, so we show back up. We'll talk some more about market structure. Let me remove these drawings here. Okay, so guys, let's zoom this all the way out. Okay, let's move this out the way so you guys don't block your eyes. See that no more. And we're going to hide this. We're going to hide that. All right. Okay, guys, now we got a nice clean chart. And we're going to talk about structure. Meaning the market will have a high and it will have a low. It'll go back into the high, as they say all this. It'll find another low. It'll make another high, and it'll come back to another low, which we kind of in a kind of a no man's land right now. So guys, we talk about structure. Really, when you look at this market here, usually your trend lines, and you start seeing the market is trending down, right? From there, then it broke that trend, retested, and went to an uptrend, which you come from the bottom. And then guys, it broke that trend, started going down. All right, go to the future. It broke that trend right here, but it was a short, so you can't really count that. It's kind of like going sideways now, guys. Notice how the market went sideways for a minute. It came and dropped. It went up. It went sideways. Everybody see it goes up. It goes down. It goes sideways. It goes up. It goes down. It goes sideways. That's called the market cycle. That's how the market cycles itself, because it's people in the market really to understand Forex, guys. It's three types of markets: technical analysis, which I'm doing right now. I'm actually finding out the highs and lows, finding out the quotes, figuring out where the market's going, where it came from. Second is market sentiment. That's what they call fear and greed in the marketplace. When people like somebody scared of when coronavirus hit, y'all saw the market crash. So when the market crashed, everyone was scared. They moved their money. The money just didn't get moved around. The money was taken out of other instruments like gold. So they took the money from U.S. and put it into gold, into the yen, because they're safe havens. So the money never left. The money doesn't go anywhere. It just gets moved. It gets moved to other instruments, and you just got to be able to know that that's happening, so you can move with it, right? So what happens is, guys, once they did that, that's the sentiment. That people got scared. Coronavirus hit, and people didn't know what to do. So you see money, everything got erratic, and that's why Trump is trying to stimulate the economy right now. So guys, be smart. If y'all getting any stimulus money, don't just go out and buy TVs, cars, and houses. Learn to start investing your money and start learning how to gain, how to increase your money, how to invest your money, how to grow it. So just do that. That's the tip for that. I mean, just learn how to do that. So guys, from there, we have something called geopoliticals or fundamentals, and the fundamentals is the news. So like, say Trump comes out and he announces tomorrow that we're going to bomb Cuba or something like that. We're going to probably see something with the Mexican peso go to a whole other area, and because that country's getting scared or they're getting ready to move, so that might move the market and then erratic up or down. Or when he was talking about dealing with Hong Kong or over there in North Korea with the yen. So those type of things move the market as well. But I'm a technical analysis trader. I have a great understanding of the news and sentiment, but I always look at what the charts show me. Always the indicators, these candlesticks here, how they go up and down, is the number one indicator on the chart. So if you see the market coming here and it stops at this point and it starts to sell, that means that the Great Britain pound is starting to get weak and the Japanese yen is starting to build strength. Then when it tries to retest, if it doesn't pass this level, it's in a strong downtrend. So guys, what happens is, and I'm gonna draw up this Elliott wave for you guys to kind of get an idea how this moves. And I'm gonna do the ghost feed. So to come here, to come down here, right? Boom. If it don't pass here, it comes back. We have what you call a high, a low, a lower high, a lower low, lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low, right? So once you get that lower low painted, you try to decide now if the market's going to keep dropping down, which is this. And let's go ahead and get this tool out real quick, the Elliott wave tool, because you're wondering now if it's going to go this way and keep dropping low. But it didn't do that. What it did was it came back and it turned around, made a high, a low, a higher high, a higher low, a higher high. But look, then it went sideways. So guys, now we kind of in like it's in a what they call a range of markets. So right now, your structure, let me erase these tools real quick. Your structure is pretty much now, guys, still downtrending. Why? Because nothing ever passed this last high. The market is currently here and here. So overall, guys, we still have a downtrend. So guys, a recap, market structure is finding out if the market is trending up or trending down with higher highs or lower lows. You guys might not know what that means still. But guess what? That's why we have a good education for you guys to come check us out. If you do want to learn, guys, we love to teach. We love to train. We love to answer questions. We want to see people be successful. We want to see people win. Guys, I'm saying that we're at 8:31, and I wanted to stop at a half an hour. And guys, I'm going to pass this back over to Ramon, and he's going to answer some questions for us. Ramon, you got it.
All right, I appreciate that, Big Mike. All right, so I looked over in the chat, and I know Andre had asked a question. He said, if you're brand new to Forex and not yet on our team, put a 1 in the chat. So if you hear me and you're new here, you're not on the team, go ahead and unmute yourself. Let us know who invited you. Any questions you may have, and this is for everybody. But if you're brand new, we definitely want to hear from you. So sorry about that. Put my camera back on. If you're brand new, go ahead and unmute yourself. Let us know who you are, any questions you may have. And for the ones that are on the team and may, been following and just taking the spike trade, not spike trade, sorry, but the signals that we've been getting, if you didn't understand anything that Big Mike was saying, now's the time to unmute yourself and go ahead and ask your questions right now, and we'll try to answer them the best so you can get a better understanding. And
guys, if you have a question, just raise your hand and we can see it.
Yeah, so just raise your hand. Yeah, it's on your control panel. You just go to it and you can raise your hand, and we'll see who it is. Let's see if we got anybody raise their hand. And don't be afraid, guys. I know some people are shy, don't want to ask questions, but let's see. Tom raise his hand. Raise your hand if you have a question about swipe trade. Yeah, I didn't mean to say swipe trades. It's just an old habit, but definitely ask a question, because this is where you actually learn at, ladies and gentlemen. This is where you learn. It's no different than in school. If you didn't ask that question, then everybody wants to wait till everybody leaves the classroom to ask the question. And, that's not the time to do it. Now's your time. Saying you have our time. You have our full undivided attention. Now's your time to ask.
You see anybody, Ramon? I don't see anyone. Any questions?
Yeah, so it says, what kind of indicators were the red and green on the chart when he first opened up?
The red and green indicators was pretty much pivots. The market, the way I look at the market is you get a peacock formation, which we showed was the high, and then you get a pivot low and a pivot high. So what that's showing you is where the reversal points are in the marketplace, from a high to a low to another high, then a lower low to another high to another lower low. So that's something that I paid for on TradingView as an indicator, because I like to see that when I'm teaching my students. I do a lot of one-on-one training with students, and so I put that on the chart to give them like kind of training wheels that way they can understand it. So I wanted to answer your question or not. But who asked that question? Let's get them on camera and start. Let's start.
It was from Melody. Melody asked that question.
Okay, let's find Melody. Melody, go ahead and say something. Melody, can you hear us?
She probably didn't have an audio on.
Yeah, she probably had
audio. I don't know if she's on a phone or on a computer.
That's no problem. That's no problem. So, guys, anybody else? Any questions, guys? We doing this. This is something we're doing for you guys. Anyone that's have any confusion about the Forex marketplace, anything anyone has a question about, guys, we here. So, this is the time to ask. If you guys are done, and we're gonna go ahead and hop off, because we gotta get to the market and make some money ourselves tonight. So this is the agent session that runs from about 8 o'clock to about 1 in the morning. And then London starts at about 3 o'clock until about 12 p.m. New York time. New York starts at 8 o'clock in the morning until about 5 p.m. Normal 9 to 5 job like we do with normal Americans. And we have the Sydney session that goes at 2 p.m. and crosses over into JPY. So Sydney actually is still going on as we speak. It'll end at about 10 p.m. tonight. So guys, like I said, we're here. If there's no questions or anything right now, I'm gonna see if Dre want to say anything, if he's still on.
Cool, Kev. Well, first Dre said, when is the next session? And that's Thursday, same time, 8 p.m. We'll definitely make sure the team gets it out there. But Tuesdays and Thursdays, 8 p.m. to about 9 p.m. Is when we'll be, doing these. They will be recorded. I just need to get with Andre so we can make sure we get it in the group so people can have it in one central place so they can go back and look at anything. Let's see. Cool Kev said, what trends should I look out for?
Trends. Cool Kev, come on. Let's come on and talk. Let me see what Cool Kev is. Cool Kev, you have your mic on?
Yeah, I'm right here, bro. You can hear me?
Yup, go ahead and talk, man.
Hey, my bad. I didn't mean to say trends, but I was asking like I was talking about more like like what type of money, like what type of trend, like money wise, should I look for out there in the market world?
So you're asking what kind of money trends that you should look for?
Yeah, like what
So
I,
are you kind of asking which market is hot or cold that you mean to make money off of? You trying to ask?
no, I'm just saying I'm trying to. I was just asking y'all which one should I look out for. I'm trying to get like y'all, man.
Well, at the end of the day, what we're doing this week is we're looking at GBP, JPY, but it's over 28 major pairs, and then you have the whole crypto market. It's a lot of pairs. If we were if we were talking today about us training and working together, I would suggest you try to find 2 to 3 pairs that you can watch, maybe even one for your first couple of weeks, and just master that and kind of watch the behaviors of it and see what it does. Because all pairs move all the time, so the market never stops moving because it's pretty much currency that every country is using every single day. So what happens is you want to be able to figure out when you're watching. So like me personally, I really like watching GBP USD. That's one of my favorite pairs. Some people like watching indices like US 30, SPX 500, stuff like that. And some people like trading gold, silver, oil. Yup. But you just watch me. Everybody.
I like gold.
Oh, you like gold? Oh, cool. Yeah, gold's an interesting pair, man. It has a mind of its own, man. And you do know that most of the country, as like I said, it's a safe haven. And sometimes gold can take you for a ride and kind of switch up on you without you really watching. But it still follows technical analysis as well.
That's why I've been messing with it in a demo account. I like it a lot. I was gonna tell you, I've been taking the trades, but I've been at work and my signal kind of bad where I'm at. Like, it's kind of like right off the highway. So
man, do not trade when you got no signal.
I be trying to take my little trades at work, but I've been unsuccessful a little bit. I still been making money, but not as much as I would make if I was more alert on it. So I just that's why I was kind of asking. I ain't really had time to look, but the JBP AUD is doing pretty good though. I like the trades that's been coming through. I like them.
Okay, so the advice I would give you, Kev, is this. I don't know what time you work or what hours a day, but everyone that trades should have their own trading plan, and you should figure out what's the best time of day for you to trade because you don't need to trade all day. Well, it depends on the trading style, whether you're a scalper, intraday, position trader, or swing trader. Me personally, you ask me. Okay?
I'm gonna be serious. With you. I like trading early in the morning, and I like trading right before the market kind of like like maybe like 2 hours before the market go down or whatever. Because
let me ask you this question: Where you from? Where you from, Kev? Where you from?
I'm from Wilmington, North Carolina. I'm one of Dre homeboys.
North Carolina. So that means you're pretty much Eastern Standard. I asked you because I want to see what your time zone was. So we're on the same time zone. So you seem like to trade like around 5 p.m. or like 3 p.m. or what 6 in the morning. What time do you think?
Nah, I try not to trade after 4 o'clock.
Hold on one second, Kev. Hold on. Guys, hold on 1 second.
No problem.
Yeah, so basically, what he was saying is, find.
No, all right. How you doing, guys? I'm sorry about that.
It's all good.
Yeah. So Kev. So what were those days you said you like to trade?
I like Sunday night going into Monday. Sometimes that's a real good thing when you wake up on that Monday morning,
Okay.
But I mostly trade I like trading I try to start watching mostly on Tuesday.
Mm-hmm.
Like mostly Monday and Tuesday is my day of study, and then kind of going into Wednesday, Thursday, and Friday is when I start trading or whatever.
I like that. So would you say you a scalper or intraday trader? You trade quickly? You kind of trade for the deal. You kind of you trade over a certain amount of days. What would you categorize yourself as?
I like trading quickly, but at the same time, I don't have time for it, so I had to adjust my style to just learn how to chill and take the ones that the signals really teaching me a little something. I be losing money because I be trying to go hard, but then I started getting my self control back, and now I'm doing fine, because I'm starting to learn how to, just being on that. You know what I'm saying?
Well, that makes sense. So I'll give you some advice, and then we're gonna get out of here, man. Since what you're doing, you're trying to scout, but you don't have time because you're a little impatient. So you got to work on your psychology and your mindset and your patience a little bit more. And when you're taking your trades, try to look at the structure. So when we look at that GJ, like how I showed you this morning, how if I said Ramon could have brought, if you'd have took that box, sometimes the market give you those little pullbacks, but it don't pass that zone. Just try to put your stop loss maybe 10 pips past that entry or at the quarter point level, because the quarter points are like market maker level zones, meaning price reversal zones or psychological levels. And more than likely, if it don't break that psych level, it ain't gonna pass it. That's just most likely. That's 100%. And then put the stop loss there and go about your business and put a take profit in. You'll win way more than you lose. And man, I think you say in the future we'll sit there and talk some more. We're good to go. But Kev, appreciate you, man.
No problem. Yeah, I know. Man, I appreciate you though. I'm gonna let you go. Everybody, I hope y'all enjoy yourself tonight.
All right, Kev. Thanks, bro.
Later.
You got anybody else, Ramon? We good?
No, I'm looking. I think he's one of your students. He said he's on your team. And he was just asking, how do we join the live trading, catching pips in GU and UJ currently?
Oh, well, this is pretty much what our Tradera team, and we have access to our trade copy signals. And guys, we normally do a call after this call to talk about our business. This is pretty much for the community. So if anybody want to get back and get more information, get back to us after this session, and we can talk about that. All right.
All right. Anybody else? I see we got 12 people still on here. I posted the link to the live session in the team chat. So if you're on the team to the live get the information for the live session, Andre posted that in the team chat. So just scroll up because we did have some people, ask some questions. It starts at 9 p.m. and I'm figuring that's Eastern Standard Time. So that's in about 15 minutes here. Get on to the live session and actually get on that Zoom and catch some pips this evening if that's something that you want to look at. So just go back to the live chat, scroll up, and it's right there.
Yep. So here we go. All right, guys. So it's about 8:43. We came to do tonight, guys. We want to only go for about a half an hour, and then we'll do Q&A. So guys, we fulfilled that. And guys, I got to get on with the team, but guys, I appreciate you allow me to teach you guys. And me and Ramon coming on here and just give you guys some information. Hope you guys took it to heart. We'll be back next Tuesday. We'll say that, guys. You have a good night.
Indeed.
All right. See you guys later. Appreciate you.